so that we will cover a new chapter on that particular due date as well as the old chapter which we have left. So definitely we are going to cover the chapter that is another important chapter, that is working capital management. And we have seen about capital budgeting, that is long-term budgeting. Working capital management is about short-term planning about the money, whatever resources we have, how we are going to use in our day-to-day life. So we are going to discuss that chapter, accounting management, financial management, fifth unit, that is working capital. But we are going to start a new chapter rather than waiting for that chapter. Okay. So new chapter about the management accounting. First, understand what is management accounting, and what is the role of that person who is sitting in a board meeting, who is calling himself as an accounting manager or herself as an accounting manager. So first, understand that person's job responsibility. In this chapter, we are going to discuss in general about management accounting. What is a use of management accounting, benefits, objectives, what kind of keywords are associated with accounting management, why we need accounting manager in a firm per se. Because again, you have to pay huge salary to accounting management. In fact, in the management, we have a separate specialization, that is accounting, financial management, which also has accounting as a part. In accounting, we have a cost management, that is again a specialization. Most of the CAs, they go for a costing as a specialization. So there are different things which are involved in management accounting. So we are going to see what is management accounting. For example, like why there are different things we are going to be going, even if you are not going to specialize in accounting, then still you have to learn the accounting. Why? Because suppose there is a patient and he says, I'm having some kind of disease. So that some kind of disease will not help us to suggest him where to go or which specialization to opt. So we supposed to know, we have to know the exact problem. Suppose it is related with stomach problem, then you can suppose suggest some different specialized to him. If it is about heart problem, then you have to suggest a different specialized to him. So similarly, irrespective of whichever department you are working, you first stage you should know whom to contact. If you know this is accounting problem, then you can contact with account manager. If it is something with finance manager, you can talk to finance manager. Something with logistics, because there is a lot of things which are overlapping. Okay, suppose you are going to hire a person and he or she is asking for a higher salary. Then what is your budget? So will you go to HR manager? You will go to finance manager? You will go to account manager? Okay, there is a lot of overlapping when you actually get into a job profile, and you will see like there is a lot of confusion. Who to contact? If manager, like accounting manager, will say it's not my job. Maybe you can contact the HR manager. But if you know that this is something to do with accounting, then definitely you can say this it is about accounting, and this is your job, and you have to take a responsibility, because like everybody will shift their task to somebody else. But if you are aware about what is accounting management and what are effects or what are the things which are connected with accounting management, you can definitely count them accounted for particular activity, and you can ask. You have all the right to ask answer to accounting management. So to understand which job is performed by particular department, you must know various departments. That's why in the first year you have no introduction or a brief introduction about various subjects like accounting, finance, HR, principles of management, that is a general topic, IT, like even a next chapter or next subject of ours will be the information technology management, IT management. So that's why we have introduction to different subjects. So we are going to start a management accounting today. Okay. So what is management accounting? Like we can see different words which are moving around management accounting. Forecasting. Forecasting is, there is a difference between forecasting and guessing. Forecasting is without logic, like you forecast based on logic, or you use certain techniques of forecasting, like maybe you're using a past data to forecast something about the future, or you are forecasting something based on opinion of experts. Delphi method, we have discussed Delphi method. Okay. Or maybe you are forecasting based on a certain cultural habits, or historical reasons. So there are various reasons you can forecast. But before you forecast anything, there is something called a logic behind it. There is a reasoning. There is a proper method behind forecasting. So that is how you can avoid uncertainty. There is a lot of uncertainty in the market, but management accounting helps you to avoid some kind of forecasting. So what kind of forecasting you mean when you study management accounting? See, management accounting is not just record of some events, okay, or you are not just doing after event that happened, you have just recorded. There are multiple purposes of management accounting. Maybe it's a legal purpose, okay, maybe it's for government, maybe it's for stakeholder, maybe it's for data, maybe it's creditor, okay, maybe it's for owners, okay, stakeholders, investors. So there are employees, there are a lot of people who are dependent on management accounting. So management accounting, it's not just about recording of some of the transactions. It is not a management of accounting. It may be accounting. Accounting, just simply accounting means recording various events. But management of accounting means you not only recording the records or entries, but you are also managing accounting, or you are making various decisions. You are making various decisions based on management accounting. So how you use accounting, that defines management accounting. Okay, let's take an example. Suppose you are an investor. Which are the factors which decides your management or your investment decisions? Obviously, balance sheet of organization. Okay, before you start, before you think about, or before you actually invest in in any firm or any business, first you have look at their balance sheet. Okay, so balance sheet is not just about their historical event. It shows their potential. It shows their efficiency. It shows where they have, where they are heading, whether they have a capacity to give you the desired return or not. Okay, so get that desired return, or to get that awareness or the understanding about the organization, you go for a management. So it is not just about a historical event, but it is also helpful to forecast where you're going to heading, where you're heading. Okay, on a planning part, like a lot of planning, lots of planning are dependent on management account. Okay. So these planning, like planning related to managing funds, planning related to giving funds to different people. Like here, you maybe get confused between financial accounting and management account. Financial management is about managing fund, and financially managing fund, also outsourcing fund, or ensuring investment, okay, from a different forms. And also it is about ensuring where you are going to spend that money, okay, financing and investment. But planning is about when to give money to particular people. Like there is accounting department in government. There was a case study, like famous case study, where a case goes like this. You are a decision maker about planning about accounting fund, okay, and you take a decision which schemes to receive how much money at a particular time. Obviously, government pass the bill and they announce a scheme, but accounting management ensures when or how much fund to be given to particular scheme. Okay, this is about accounting management and the planning part. So if you are at a decision making point, and suppose tomorrow government announces some schemes, and there is going to be election very soon. There is going to be election, and obviously before government wants to go for a populist policy, and they whatever promise they make, they want to fulfill, so that people will have a short term memory and they will think that, oh yes, whatever government makes announcement, they fulfill it. So government pressurizing you. Similarly, here every department will pressurize you to release their funds. Okay, in the accounting management, you are also in charge of releasing your fund. So every department or everybody will pressurize you to release their fund for their department. So here a particular ministry will force you to release a fund. On the other side, you got some international contract. Government got some international contract, and government needs to invest money into this project, and after investing money, government will going to get a benefit. So you have a lesser amount with you. You cannot manage both the activities at the same time. So it is about a decision making capacity, or it is about a deciding priority, where to invest fund now, or where to release a fund at a prime of issue at a first place, and where you can hold for a future project. So this is important decision about releasing a fund or releasing an amount is done by management, because it is again based on planning part. So if you are good at the planning, you will manage these things, like you can avoid giving it to the populist policy, and in fact you can give it to the international project where you're going to invest money. It is not a spending of money. It is about investing the money. Once you invest the money, you will get a better international recognition. You will get a better business. You will get a more contract, and obviously it will ultimately generate revenue, which will add up to your GDP and ultimately per capita income of people. Okay, so planning part is also considered as a inner work for management account. Problem solving, as we have discussed one problem, obviously, like it is not just you will say directly to minister that okay, I'm not going to give you money now and I have some other thing. But it is about a communication. Or you are not going to say other department like you are not going to get money now, I'm giving to logistics, so marketing department will get a later on. So it's not that easy that you are just looking things into black and white. There are gray areas too. Like maybe you will go into deep down and you will ensure that okay, marketing and logistics both departments are asking for money, so which one where we can hold or where we can give a little money and we can just book it, like instead of buying the product you can just book by paying some initial money, okay, or by paying some advance. So can we manage things by paying some advances or uh, borrowing money for a short term from somewhere else and ensuring that we are getting everything into a place, we are able to manage everything which is into our priority list. So problem solving capacity or management of accounting is not just about giving fund to somebody and saying no to somebody else. No, maybe they're like being on sitting on such a responsible place. You have to manage everything. So by managing a borrowing, by ensuring that giving some amount here, giving some amount there, or by some or other way, you have to solve the problem based on that particular situation. Like in terms of the case which we have discussed, you can ensure that while going for international project, you first give a priority to international project, and while announcing a populist policy, you can take a loan from some other department, or you can divert a fund from some other scheme or somewhere you can manage to government as well as to manage the international project. So this is about finding a middle path. Like this is always suggested. Like whenever you have a problem, we have to always find a middle path. Can we manage both the things? Rather than giving priority to one and avoiding other, can we manage both? This is what we call middle path. And always in any kind of case study, if you read any kind of case study, you will find ultimate solution is to find a middle path. Okay, always a solution will be lie in between both the things. Like there is nothing called black and white. It is always in a gray area. Suppose like you receive a case study in some other field that there is only one boat and you have to take like several people to other side. Like this side may be having a flood or some problem. So you have to take a people on other side. So there are three children, there are two pregnant women, there are three older women, and there is one minister. There are various people are there on this side of the river, and you have to take them to other side. So whom you will give a priority? So obviously it is not about giving somebody priority and avoiding somebody, or taking a child and leaving minister to die, or taking minister and leaving children to die. It's not about that. You have to find some middle path. Like you will take a minister first, and why minister first? It's not because he is at a primary he is at a respectful position. Because you can take a help from a minister, and you can arrange maximum votes with the help of minister, because he having the contact, he is in a power. So maybe at that, like using his power, using his relationship, you can arrange a multiple votes and you can take everybody from this part of the river to that part. So this is a middle path. It is not about ensuring that you make happy to somebody and completely make it other. You always have to find a middle path. Even in our daily life, we do the same thing. We'll satisfy our own ego as well as we help others, or we try to manage that others are also happy with our behavior. So this is about problem solving. Management accounting also includes decision making. What do I mean by decision making? As we said, as an investor, you first look at a balance sheet of organization, different statements offered, different statement like about real account, nominal account. You'll see what is personal account. So by various accounting principles, or by looking at various statements, okay, that the trade deficit, like in terms of India's investment in India, most of the countries look for a trade deficit of India. Okay, if India is a trade surplus, then obviously there will be more countries or more companies who are interested into entering into India. But India is again and again going under trade deficit. They will say Indian government is under a certain like severe threat. So they will not lend money to India, as well as they will not trust Indian government. So that's why we have to reduce the trade deficit. As a government, you have to take a decision about particular company. Can you see that government, that particular business entity has regularly paid their taxes? All the accounting balance sheets or all the statements which they are registering with the government are appropriate. Then obviously government can take a decision like or can show a favorable situation towards the entity. But if the organization finds there are a lot of mismatches, there are a lot of wrong entries into a balance sheet, then obviously government can take a decision. Okay, or as a manager based on balance sheet, what funds you have, what funds you, what number of creditors you have, what is your debtors position based on credit and debtor statements, or based on how much money you have to give it to somebody else and how much money you have as an input. So based on that you can take a decision about the future. If there are a lot of fund lying with the accounting management, obviously you can ensure that you take a decision about investment. If you have a lot of money to give and you have very less inflow, then obviously you can find the new sources. So lot of decision of a lot of stakeholders are based on management accounting. Okay, management accounting in short, it is called as a language of business. Don't tell me where you are. Show me your balance sheet and tell me what your balance sheet is. Your balance sheet will tell you everything about your organization. It will tell you everything about your financial status. So that's why we say management accounting, it's language of business. Cause and effect, maybe as we have discussed about capital expenditure and revenue expenditure. So capital expenditure, we have not discussed. Maybe I have discussed some other lecture, but I will revise. What is capital expenditure and revenue expenditure? Suppose there are two friends, both are having 50,000 rupees. Okay, one friend goes to market and he buys clothes, garment, goggles, whatever he wants. Okay, watches, films, and whatever he wants, he do with that. And there is a second person who goes to market and he buys 10 gram of gold. Okay, so there are two conditions. One is where you have spent the money to buy garments, and another condition you have spent the money to buy a gold. In both the condition, you have spent money, but you have to remember in the second condition, there are different kind of expenditures. Okay, one is revenue expenditure. Once you spend a revenue expenditure, you don't have any way to reverse it. Okay, एक बार आपने कपड़े खरीदे, that is okay, you have spent all. But when you buy a gold, there is a chance this is actually investment, that is called capital expenditure. You have created asset, you have spent money to create asset. Okay, similarly in terms of government, like I hope you have understood, revenue expenditure is irreversible. This once you spend, that is one. But capital expenditure is investment. Either you create asset or you release from a liability. Okay, you have borrowed from somebody 50,000 rupees and you repay the loan. Okay, this is also expenditure. Like 50,000 is gone from you, but this is reducing liability. There was some liability on you and you reducing liability. So there is a difference between expenditure. So like when you have seen a balance sheet and you see there is a loss, but when you see a loss, you have to find a cause and effect, and that cause and effect you can find in balance sheet. Okay, like consider government's balance sheet. Okay, you are watching as government balance sheet and you have seen there is a deficit, but there is revenue deficit and primary deficit. There are various deficits. So you have seen there is a revenue deficit. Revenue deficit is the total deficit, income minus expenditure. Okay, this is revenue deficit, total revenue which came to balance sheet government company and whatever expenditure government has done. But if you have to see in detail, suppose you have seen there is a maximum expenditure which government has incurred on paying interest rate. Okay, the primary deficit when government has paid maximum amount to pay the interest amount which loan is taken by previous government. Suppose today BJP is in a power, and they will say rather than looking for a revenue deficit or fiscal deficit, go for primary deficit. So primary deficit will tell you or will cancel whatever amount they have paid on interest, because interest is paid on loan and loan has taken the previous government, maybe a Congress government. Okay, so don't judge us based on fiscal deficit, judge us on a primary deficit. So in a primary deficit, what we'll see, we'll keep aside all the interest which is paid on previous one, and we will see what they have done in next last 1 year. So maybe you will get to know cause and effect. Okay, effect is deficit, but cause is they have paid heavily on interest, and this is the highest amount which every year government pays, in terms of their balance, in terms of their expenditure. So balance sheet or year of management accounting is not only about different entries, but it has cause and effect of different It has a cause or different effects. Okay, cost accounting. Okay, cost accounting is, before you actually go into investing in anything, you first calculate the cost. How much cost I'm incurring by entering into this product, or by manufacturing this product, or by entering into this market, or by going into this particular project. So okay, this cost accounting is also important part of management accounting. Because before you enter into business, you must have to be ready with your costing. Since you are ready with the costing, then and then you can plan for or forecast for the potential of particular industry or particular product. Okay, performance analysis, as we said, like most of the businesses are judged based on how they are performing at their balance sheet. If they are performing well in the balance sheet, then definitely they will get a better respect, or they will get a priority from investors. Okay, let's take an example of Satyam scam. Like what was Satyam scam? Satyam scam was they have forged the balance sheet. They have wrote a wrong or inflated figures in a balance sheet, and that balance sheet led to increase in investment in Satyam. People were ready to invest in Satyam because of their balance sheet. Since their balance sheet was manipulated, it was inflated balance sheet. There was it's like a Ponzi scheme. There was nothing on a reality, but they have just shown as a part of figure. But suddenly that bubble has burst, and people have lost trust on Indian companies. It is not only about Satyam. It is not only about Satyam that those investors who were investing in Satyam, they lost money. But it is about India's economic status. It is about India's respect, because we have a lot of money from FD and FI, foreign direct investment and foreign indirect investment. Okay, we get a lot of money from those sources. The moment people have realized that the SEBI is not working, SEBI is surveillance agency which keeps eyes on share market or stock exchange. Okay, the moment they will like the FD and FI realize that Indian government is not having a control on their share market, or the agency like SEBI which controls stock market, they doesn't have enough power or surveillance to look at whether their people are showing the right balance sheet or not. The people will lose the trust, and the moment they lose the trust, they will not invest in Indian economy. If they not invest in economy, India will never be able to achieve the 5 trillion economy, which is India's target. And to achieve that 5 trillion economy, we need lot of FD and FI. That's why the prime minister going to every country and they are convincing the business community of that particular country to invest in India. Okay, so performance analysis can be understood from management accounting, and management accounting is important source to involve people or investor into that. Budgeting is obviously about planning about long-term investment. We have discussed about capital budgeting. Capital budgeting is planning about investment in a long-term assets. Like in the management accounting, you will find that there is a lot of surplus money available with the organization. Obviously, instead of just getting into interest, or instead of saving into short-term account, historically they can see like this much of surplus is there every year. So instead of investing that money for short-term earning, they can think about increasing their business. Okay, in working capital management, there was two kind of investment. Okay, so we can invest into a long-term assets. We can invest into long-term assets, so either to increase our business, increase our production, or to reduce our cost. Maybe by buying a new machine, we can reduce our cost of manufacturing, because there will be lesser wastage, there's lesser labor required there, or lesser raw material required. Whatever we have to, we have advantage of that machinery, but we can accrue that, and we can ensure there should be reduction in our costing factor. Okay, so or reduction in our cost, or better benefits, or better profit. So various way we can use management accounting, to ensure, like with this example or with these words, we have tried to enter into a profile of management accounting. Okay, so by the time we complete our syllabus, make sure every time you consider yourself as a management accountant. Okay, rather than considering yourself as a HR or marketing, because if you be into that role, you will be more able to connect with the various topics, or the slides which we are going to discuss. So try yourself to consider as a management accountant. Okay, so objectives of management accounting: better planning for future policies. Yes, since management accounting has a corpus with them, they are at decision making, or they release the funds. I'm not saying they are the whole decision maker whether to release a fund or not, but yes, they have ability, or they have that that position where they can explain to management where we have to invest and where we have to postpone the investment. Okay, so management accounting, those who are actually handling money, like I said, the marketing team is the most important team in any organization most of the time because they are ultimately bringing the revenue to the organization. Similarly, here management accounting is another important entity because they are ultimately holding what revenue marketing is bringing. Okay, so they are as a guardian of whatever that is available with the organization. Or they are making entry and they are aware where we are spending and where we are not spending and where we are supposed to spend and where we are not supposed to spend. Okay, so the management accountant is in a better position to involve into strategic meeting and to suggest something about the future. Okay, financial management, availability of finance with the organization. But in these areas, we should invest in these areas because these are the things historically giving a better profit. Or here we are having a lesser risk. So by some or other logic, management accountant can explain about a future plan. So obviously, management accounting releases salaries. Okay, they manage about they ensure about hiring the best of the best talent. Like how much budget we have, how much budget we can allow to to ensure the hiring a better talent. So obviously at the top management also they control the performance by giving more money or more talent people to the organization to motivate the workforce. Accounting management always have. I remember our accounting management manager. So she has lot of tools with her to motivate the people. So like whenever they used to think like okay there is some surplus profit for our organization or there is some surplus corpus available to our organization, they used to launch some or other programs like you know family picnic. So family picnic obviously motivates people. Like it shows a company's concern not only about their employees but it also shows concern about their family members. Okay, like they used to launch some programs on 15th August or on 26th January, so that they can distribute some of the gifts to some of the people, like launching some programs or increasing incentives, giving some foreign trips or top performers. Okay, so this is how like foreign trip for family also. Like there was a family trip for a family in our organization. Those who are performing as per the expectation of the top performers. Okay, employee of the year. So there were a lot of things which management accountant can do, management accounting can do to motivate workforce. Okay, it's not an expenditure; it is actually an investment. Like it re-energizes your employees. That gives a new energy to your employee. Okay, that lead to motivation. Okay, up-to-date financial information. Obviously, objective is to up-to-date financial information, and that financial information has implication on multiple things. Like even finance manager can understand, can make a planning about adjustment of finances. Investor can take a decision about investment looking at the financial management. Government or legal ways like to ensure a tax compliance, to show like what is their side in terms of negligence about tax or whatever query that is raised by income tax department, okay, or tax department, sales department. So these statements helps to ensure or to safeguard organization from different government norms. To reduce tax expenses, obviously, if government is well in control of their accounting statement, they know how much they spend, where they have, where they have a tax holidays, or where they can save money. Okay, in costing and taxation, we can see like through the various ways, government can save their money, which they are spending on taxes. Okay, there are a lot of ways. Maybe you can say tax avoidance. Okay, maybe you can say tax avoidance. But organizations want to maximize their profit, and to maximize their profit, they will find some of the loopholes to save their money. So by writing a different headings, like in HR we have seen, rather than paying as a basic salary, you can pay as other expenses or you can pay as a convenience. So convenience allowance will not attract any taxation. So obviously government will, like organization will save taxes and as well as employee will save taxes. So by using different principles of accounting, by using various loopholes of a law, government or financial accountant or management accounting can save a lot of money of the government, which people income which they spend on taxation. Cash flow management, obviously cash flow management is again an important objective of management accounting. Every year or every after periodic review, you will come to know what is your cash flow, net cash flow, how much money actually is going out of the organization, or how much money is coming. It is not only about today's condition, but even in the future, like after 2 months or 3 months, we are going to get some money from a debtor and we have to say pay some money of the creditor at that particular time. So okay, so that is also part of working capital management. Okay, how you manage your working capital, like okay, after 2 months I'm going to get the money from this person and I have to pay it to this person. Okay, so that is nullified. Okay, so this is, I don't have to consider about this. But after 2 months I'm going to get X money, but that is something lesser than what I have to pay to other person. So I have to manage the remaining amount. So this is how you understand the cash flow management, and you can convey the same message to financial management. To manage this much of amount, since we have to pay to creditors. Okay. Debtor and creditor. Debtor is DEBDOR. Debtor and creditor. Creditor is somebody to whom we have to give money. Okay. We have taken stock from them and we have to pay money to them. That is creditor. Okay. Debtor is somebody from whom we have to take a money. We have sold the goods to them and we have to collect the money from them. So this is creditor and debtor. Okay. Cost control, obviously, since you have a balance sheet in front of you, you have seen that we have spent X amount on manpower or X amount on infrastructure, X amount on incentives. Obviously, you can ultimately by looking at your statement, you can demarcate that we have to reduce expenditure on this part, we have to reduce expenditure on this part. So this is about cost control. So finally, by looking at the balance sheet, by looking at the different statements of organization, you can think of, maybe you're spending lot on raw material, okay, or maybe there is a lot of money which is stuck into work in progress part, okay, like manufacturing part is taking a lot of time, or maybe recovery of money is taking a lot of time. So you can reduce that cycle, or you can increase your efficiency based on your statement or your management accounting. So these are some of the objectives of management accounting. Actually, there are many objectives of management accounting we have discussed in first slide. So whichever we are missing in one or other slide, either we cover into introduction, we cover into objective, or we cover into importance. By one or other way, we will try to cover all the important points of management accounting, which are essential to understand or to enter into the role of management accounting. Okay, importance of management helps in making a plans. Obviously, we have discussed that management accounting helps in making plans. It's not only for management accounting or the management that particular manager, but it also helps to finance manager. We have seen the example, like after 2 months you are going to get a 1 crore rupees from one source, but you have to pay 2 crore rupees to somebody else. So before 2 months, you can give a direction, or you can inform financial management that after 2 months we are going to need 1 crore rupees. So obviously they can make their planning accordingly. Like after 1 year, after 2 months, how I'm going to adjust that 1 crore. Similarly, a finance manager can make a plan. Marketing manager can make a plan. So marketing manager will come to know that after 2 months we are going to have this much surplus amount with us. So you can launch a new advertisement planning. Like you want to go for a television planning, you can go for a television planning after 2 months, because we are going to get this much money from this source. So marketing department can also make a planning about their advertisement promotion. Okay, whatever planning there. So in this way, every department will get a help from accounting management, and they can take decision for their own department. Assistant decision making, we have discussed, like since accounting management helps by providing the information, by providing a figures, or by showing a language of business. Everyone can make a decision based on that statement. Whether it's investor, outsiders, insiders, whoever, like owner, employee, everybody can make a decision based on accounting management or accounting entries. Okay, measures the performance. Obviously, ultimately, everything is about measuring the performance. So obviously, about the maximization of profit of stakeholders. So after every year, or after periodically, whenever you want to measure a performance by looking at your balance sheet, by looking at that one page, you can actually, or by looking at that final figure, okay, bottom of the line, you will understand the bottom figure. You will understand where company is heading or what is the present status. So by understanding or by reading the accounting statement, you will understand the company's actual performance. It increases the efficiency. We have just discussed. Since efficiency is about either increasing or reducing input and increasing output. So how can we do this? We can do this by increasing, either reducing the input. Since we have all the entries in front of us, like we are spending more on manpower, we are spending more on raw material, we are spending more on work in progress, wherever you are spending, either you can reduce that expenses, or you can increase the income, or you can output, or you can increase the input, like you can hire a more manpower, like you have find there is a regression or there is a positive correlation between manpower and the output, or you have seen there is a direct relationship between advertisement and the output or the revenue, then obviously you can increase your efficiency. For example, in 2018 statement, if you look at 2018 statements of Byju's, you will find that that particular Baiju has spent 118.5 crore, 188.5 crore on advertisement, and their revenue was, like they have increased their expenditure on advertisement by 100%. Okay, but their revenue has increased by 150%. Like they have reached to 460 crore revenue in that particular year. So obviously next year what they will do? They will going to spend more on advertisement. This time they will take Shah Rukh Khan, or they will spot on a better points, like they will get a better spots. Maybe like a lot of TRP is available in particular serial, so they will go and they will show their ad in that particular activity where most of the people are watching TV. Okay, or they're watching particular serial, like in a cricket match, like most of the Indians are watching cricket match. So obviously they will buy that spot because there is a higher demand. Everybody want to show their ad into that particular advertisement, because normally there are only two advertisements between two words, and everybody wants their ad to be shown in that particular break. So there is a higher demand for that particular slot. So they have increased their slots. They have got prime spots. Okay, this is how they spent a lot on their advertisement part, and ultimately their revenue has also gone up. So by looking at the balance sheet, you will come to know which is giving a better results and which is something where we can introduce a cost control. So this is about increasing the efficiency, better service to customers. Okay, since your customers are, there is a difference between customers and consumers. Customers, like maybe you are into manufacturing oil and you are selling it to ultimate consumer, but your customers are there, like your vendors, your suppliers, okay, your channel partners, or your investors. There are so many people who are your convinced customers, to whom you are convincing about your product. So since your customers are there and they are convinced about your balance sheet, they know this company is making historically profit, or they are into a better business. So obviously your customers will have trust on you. Once your customers will have a trust on you, there will be there will be ease at collecting funds, or doing a business with them. Okay, there are certain firms like take a Nestle. Nestle is performing historically well. So obviously their distributors, their vendors, their raw material suppliers, their investors, they are continuously having trust on Nestle. Since they have a trust on Nestle, Nestle will never have lot of shakeups or lot of hiccups in their share prices. So their share prices are normally stagnant, and that is something on a positive side. Okay, they increase with a slower speed, but they never show there is a lot of fluctuation in their share prices. So this is something about giving a better service to customer. It is not only affect the balance sheet of organization, but it also affects the balance sheet of their customers. So if they find this is a safe investment, we don't have a lot of hiccups, lot of fluctuation in their share prices, so we can trust on them. So this trust can be built by historical statements of your business account. Okay, so it is not only about last year balance sheet, but people also look for your historical balance sheet to understand how much profit you are registering year on year. Okay, your year on year growth shows your steady move. Maybe we are moving slowly, but it is a steady growth. So obviously people will have more trust on it, rather than showing 100 crore profit on first year and second year showing 200 crore loss. So this is not something which people will prefer. Maybe you have shown a higher profit at 1 year, but there is also loss on second year. So that shows there is not stability in the organization or their policies. Okay, why people are investing in India? Because India has better service to their customers like investors. They always secure their customers from FII and FDI and NRIs or foreign MNCs. They always ensure we give a better ease of investment. We provide better ease or security to their investment. That's why people are more interested into investing in it. That's why India has received one of the highest FDI in last couple of years. Raises the profitability. Obviously, if efficiency comes, if you are able to make a proper decision making, if your plans are perfect, okay, if you have achieved the ultimate aim of increasing efficiency, that is either reducing input or giving more output. Obviously, increasing output means what? You raise your profitability. You narrow down or you narrow down or you increase the gap between your losses and your profit. Okay, your input and output. You make a proper combination. Okay, you handle uncertainty based on your planning part. That is how you reduces your profitability. Provides reliability. As I said, reliability is about trust. Okay, if you are able to give a same result, every time, this is about reliability. Okay, somebody is like, suppose somebody has thrown one stone and he hit the bottle. Or if he is trying, after that he is trying 10 times to hit the bottle, if he is not able to hit the bottle, that shows what? A lesser reliability. पहली बार, like that time you hit the bottle luck by chance, but it's not something you have better technique to do it. But every time if you are hitting the bottle with the stone, that means you have a better reliability. So how long you are able to create the same result, that decides your reliability. If every time somebody is saying on a different point or different viewpoint, then that person is not trustworthy. That there is no reliability. But if somebody is saying the same thing, irrespective of the situation, you can say it is about reliability. Reliability and validity. There are two things which are associated with accounting management. Reliability is about giving a same result every time, and validity is about doing the same thing which you have committed. Okay, if you have said this year we are going to make 100 crore profit, and if you achieved 100 crore profit, that is a validity. So people will have trust on your words. Reliability is giving a same result after every attempt. That is about reliability. Remember the word between reliability and validity. It is also related with research, market research, research methodology, which will be a subject in some or other semester, or maybe you have already studied it. Okay. So research methodology has two words, that is reliability and validity. I will revise again. Reliability is about giving the same result in every attempt. Okay. Whereas validity is about delivering what you have committed. Okay. Or like achieving the objectives. So if you achieve the objectives, whatever you have declared, you have achieved that. That means you have a validity. People will trust on your words. People will trust on your statement. That's why I said the Satyam accounts. Satyam accounts affected India's reliability and validity. People have lost trust on Indian stock market. Okay, here company can show inflated prices, so we can't trust on the balance sheet which is shown by these companies. Okay, but ultimately government has came heavily on Satyam, like it was again matched into Mahindra. So finally the matter is solved and people have again have a trust on India's stock market. Okay, there are certain limitations which are associated with accounting management dependent on others account. See, there can be a different methods of recording the events. There can be different methods of recording the event. Like maybe somebody has calculated somebody has calculated or used a different tool to calculate the price of machine. Okay, maybe after 4 years the price of machine will be this. Okay, maybe you know and never know. Actually, after using, the price of machine will increase. Maybe there will increase in steel prices, and ultimately the final cost will increase. Like Yamaha bike, the Phaser bike, which was available at 70, 80,000 rupees 10 years ago. So now, if you have asked me that time, like, sir, what will the price after 10 years? So maybe I have said 30, 35,000 rupees. Okay. But now the price of that same Yamaha price, the new bike price is 1,40,000 rupees or 1,50,000 rupees. Okay. So even if you have a second hand bike, you can sell it at 50, 60 lakh, 50,000-60,000 rupees. So that shows what? You are getting a better return. But here is a limitation of accounting management. You cannot predict or forecast the future with certainty. There is always involves uncertainty. Okay, and you are dependent on somebody else accounting, or you are completely dependent on the figures which are shown in your balance sheet. So you have a lesser scope to use your own understanding. Rather, you are depending on the paper, on the numbers. Okay, so this is limitation of the accounting. Irrespective of how good you are, you cannot predict future 100% with a 100% certainty. Okay, so there is always involved some uncertainty. Expensive, obviously it is expensive. Like you have to hire a separate person, you have to hire a separate team. It is not about just one person who will manage the entire accounting. They will have a subordinate, there will be an entire team, there will be a national accounting manager, there will be state accounting manager, there are a lot of team will be under them, regional accounting manager, and they like they have to be paid salary, and there is a lot of expenses which are involved in making accounting. Okay. You have to spend a lot on collecting data, you have to spend a lot on writing a data, managing accounting books. So maybe that has a lot of benefits, but it is also expensive. Every organization cannot manage their separate accounting department. It is only a tool. It is not the ultimate. Yeah, just you by making an accounting statement, the ultimate best decision will not come with the client. Just by making a balance sheet, the ultimate decision or the best decision will not come with a fly. Like I'm the best. This is just a tool. You have to analyze the accounting management, or you have to analyze. You have to read the balance sheet, and ultimately then you have to make a decision. Like we have discussed, maybe till 2016-17, 5G was in a loss, but there was a lot of people who were ready to invest into 5G. Why? Because they have seen their growth is very fast. If we grow with this speed, very soon they will achieve their break-even point, and once they will achieve their break-even point, they are going to give us a lot of profit. So better, like they have Tiger Group, like most of the big names, they have invested in Byju's. Why? Because they have seen their growth is very fast. They have analyzed the growth based on their own vision. Okay, it's not that everybody is running behind investing into Byju, but there are few people who have analyzed the statements, they have analyzed their accounting status, and they have predicted that this organization is going to make a profit. Or take an example of recent Ruchi Soya's acquisition by Baba Ramdev, okay, or Patanjali. So when Baba Ramdev has acquired Ruchi Soya, the share price was 15 rupees, 20 rupees. But the moment Ramdev Baba has acquired that firm, and within a 6 months, the prices have gone to sky level. Okay, so this is again accounting is just a tool. You cannot predict 100%. You have to apply your own management skills to understand the future and to understand the being behind particular number. So number is just a fact, but you have to understand and you have to predict, or you have to apply your knowledge about the potentiality of these numbers. Okay, lack of knowledge, like there are many people who are not able to understand the accounting principles, and they are not able to read the balance sheet. So for many people, balance sheet doesn't make any sense. Okay, and there are many people who are aware about the balance sheet, but they were not able to understand the particular term, and they are not able to understand the meaning behind particular entry. Okay, what is double entry, what is single entry, what are debtors, what are creditors. So there are many technical words which are associated. So normal person or the common person will not be able to understand these things, and those who are excellent, or those who are good at accounting, they are only in a condition to understand the terminology, and they only take a benefit of this accounting principle. So there is another limitation of it. Like SEBI always want to provide equal platform to every investor. Okay, but many a time people will not able to understand the share market. Like you can see there are a lot of people who are providing a one day coaching, or a 2 day coaching to understand share market. That's okay. You will understand little bit about the share market, but share market is something which cannot be learned, or which cannot be taught in 1 or 2 days. That's something needs your own understanding or your own application of knowledge, experience. Okay, so you have to understand that there is some limitation, that there are many people who are not aware about share market, but still they are investing, and it is SEBI's responsibility to make everyone aware about the share market. Okay, lack of objectivity, like who have lost the money when 1992 scam has happened, or who has lost the money, you know, during Satyam scam. Those were the, you know, innocent investors. They have just believed on their agent, or they just have a belief, that time's economic trend. They have seen, okay, if you invest in share market, your prices are, your money is doubling in next 3 to 4 years. Okay, so okay, instead of investing in gold or real estate, we invest in stock market. So they were innocent investors. It's not that somebody who is, full-time investor, they have lost the money. It's not that. They knew that the market is going to correct very soon because it's inflated the market. So they have not invested, or they have not invested all their money into one share. Okay. There was a time like when people blindly used to buy a shares which is buying. 19, Harshad Mehta is buying, because then if Harshad Mehta is buying particular share, that means that share has potential. So people were blindly following him. But ultimately, they went into loss. There were many people who committed suicide after this scam. Okay, lack of objectivity. Okay, accounting is just about a number. Okay, there is no particular objectivity behind maintaining account. Okay, but you as a reader, or various reader, has a various objectivity from that particular uh, balance sheet. So maybe it's a loss of time for somebody who is looking just for a profit, and he has to undergo a complete balance sheet. So there is a limitation to make a balance sheet with a different objective. This is just a statement. You have to read it according to your way. Okay, there is something called data and information and knowledge. Data, information, knowledge, both are having a different meaning. Both we use it as a synonym. So data is a raw data, which is huge availability of data, but you have to filter it based on your requirement. That becomes information. And once you have a information, when you further apply a filter and make certain observation from that particular information, that becomes your knowledge. Okay. But here you have just a data. You have to ensure what information you need, or what information you convert, or how you apply a filter. And again, when applying a filter, when you have to apply a filter from converting the same data into information to knowledge. So there is no particular objectivity involved in. Based on your own requirement, you apply, you use a management account. Evolutionary stage, obviously still there are many people feel that we are not perfect. We are not at a perfect stage with respect to accounting management. Still, we are at a nascent stage, or we are in an evolutionary stage. There are a lot of confusions which are still there in market about accounting management, like how to calculate a depreciation. How to, like, there are different kind of calculation of profit. Somebody calculate profit based on forward calculation. Somebody on a backward calculation. So what we mean by forward and backward calculation? Suppose there is 100 rupees, or 10 rupees pack. Okay, 10 rupees pack, and somebody comes to you. Now you buy this 10 rupees pack, and when you sell it, you will get 10% profit. So obviously, what you will think, yeah, I will get this product at a 9 rupees, and 10% profit means I will make 10 rupees. So my profit is 1 rupees. But the person will say, no, 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 it's not about a backward calculation, it is about a forward calculation. You invest 9 rupees 91 paisa in our product, that is almost 91 percent product, and you will get 10% on that. That is again 9 rupees. That is 0.91 paisa. So again, there is a, like, here maybe a difference is only about a zero point 0.9 paisa, but at a larger context, it makes a huge difference. Okay, 25% profit. Suppose you have a 25% profit on 100 rupees of goods. Okay, so what you will say, if I sell this product, I will get 25 rupees. That this price will come to me at a 75 rupees, and I will get 25 rupees. But the person will, come in a different way. No, sir, you have to buy it at 85 rupees, 80 rupees, and when you sell it, you will get 20 rupees. So there is a difference, like 20 rupees or 25 rupees. Again, at a larger context, it's a huge thing. So there are different principles, different things which are, still create a confusion how we reach to confusion profit, or what thing we have considered, what thing we have neglected while calculating the profit. So there are different confusions things which are still there in terms of managing accounts. That's why we say it is, it's in a evolutionary stage, and there are many people who are aware about making a statement, but we still don't have enough knowledge about how to read balance sheet. Okay, still there are a lot of techniques, there are a lot of education need to be provided to understand how to read management account. Effect of time element, as I said, present value of money is a different thing. Present value of money has a different meaning. Or when you, like, suppose you are investing today 100 rupees, and look, after 1 year you are going to get 104 rupees. But ultimately, balance sheet may be showing 104 rupees profit next year. But when you calculate present value of that 104 rupees, it may come to 102 rupees. So there is a time element when we are going to get the money. What will be the price of that value of that particular money after 1 year, or before 1 year, or currently. So there are different things which are again affecting, or which are not sure in financial statement, okay, or in management account. So there is a time effect or time element which affect the limitations of management account. Okay, subfields of accounting. There are subfields like financial accounting. We have discussed in detail, so I don't think I have to discuss again how you manage your three functions: investment, financing, and dividend providing. Okay, but management accounting, here we are more interested. Management accounting we are going to discuss in detail. We have just saw the we have just seen what is management accounting, and we have just tried to introduce management accounting, how accounting can be used by management, or how management can create accounting principle to ensure there will be a better efficiency in business. Okay, cost accounting is about, cost accounting is also part of accounting, like where you have a separate accounts about each raw material, or about each factory, or about each department, how much expenses or how much cost we have incurred on a particular department, on a particular product. HR accounting, again, it's about how much money we have spent to hire a manpower, or how much money we are spending on human resource. Okay, this is about accounting. This is also maintained by financial management, or accounting management, about knowing how much money we are spending on human resource, and how much return we are getting from those investments. Okay, social accounting. Social accounting is how much our business is affecting to society, maybe in a positive or negative way. Maybe you are having an industry and you are affecting or environment of that particular air pollution, or water, river population, water pollution, whatever way you are affecting a society. You also need to consider that cost. Okay, if you are giving more to society, okay, like you are generating employment to that particular area, in that area's economy is, run by your company, you are giving better benefits, or a product at lower price to that particular locality people, then obviously these people will be very happy. But if you are adding pollution, if you are adding, unwanted elements into air, then obviously people will not be happy. And to avoid that, people pay CSR. To have a better accounting or social accounting, people pay CSR, that is social CSR, corporate social responsibility. Okay, as a your responsibility, or as you are using natural resources, you are affecting natural environment, you pay 2%. You pay 2% of your profit as a part of CSR, corporate social responsibility. So these are some of the fields of accounting where we have managed different accounts based on their utility. We'll start second unit in next class.